Hello, my name is Tim Gregory. I'm the Senior Fund Manager with Vermeer Investment Management in the UK. And I just wanted to wish everybody the best and hope that everyone's friends and family and everyone is getting through this situation as best as they can at the current time. We're trying to focus on the markets going forward. Obviously, we've been through a situation where there's been a major economic shock. Stock markets, bond markets have responded accordingly. There has been something of a rally. And now we're trying to figure out what happens next. And one of the areas of the market that we're trying to think about is what happens to share buybacks and dividends going forward. Share buybacks have been an extremely important source of demand for equities for a very long time and a key support to markets. What happens if they're removed? Does that have a big negative on markets? It may do. But one thing that could be done to rather circumvent that problem is if companies were to focus more on the dividends they pay to shareholders and focus rather less on share buybacks. Interest rates have collapsed to record low levels and are likely to remain low for the foreseeable future. So income generation is going to be harder for investors, and dividends are one way that we believe investors can look to equities as a source of good investment. Now, we fully appreciate that in the short term, companies are going to be doing everything they can to preserve cash. They may be suspending buybacks, they may be pausing on their dividends for the time being. Clearly, the priority right now is to focus on cash flow. But on the other side of this situation, we do think investors will refocus on dividends, and we hope and think that company managements will also think about the importance of dividends to investors as a way of promoting their stocks. Many very significant US companies of massive balance sheets with enormous amounts of cash flow don't pay any dividend. And we hope that this might be an opportunity for them to refocus. And instead of buying back shares to help earnings, we hope that they'll think also of paying dividends to investors to help boost the income that they receive and to make their equity more attractive going forward for the future. Now, a lot of companies are going to find this difficult because they may be in industries where it's a long time before they see recovery. It's going to be very interesting to see what happens in the oil industry, traditionally a very big source of income for investors. But clearly, we've seen an enormous collapse in the oil price and more recently, quite a recovery. It's going to be enormously important to see how demand recovers and also what happens to the supply side after the big fallout between Russia and Saudi Arabia partly triggered the collapse in equities during the first outbreaks of COVID-19, when the oil price really slumped to high levels, to low levels because of fears of a price war. Now, hopefully those fears will subside, but we also need to see demand improve significantly for oil industries to be generating cash, paying down debt, and able to pay good dividends. We like to think that investors should focus on quality, good management, strong balance sheets, great cash flow, companies that can pay their dividends in the future and reward investors for being long-term. And we hope that there'll be more focus on dividends and perhaps less focus on buybacks. Thanks very much for your time. I hope everyone is well and that their friends and family are also okay. And I hope you can get through and look forward to speaking to you very soon. Thanks very much.